My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey kids, welcome back to another episode. Today we're talking with Ryan Haase, who does a couple of different things in real estate, especially in the capital space. He raises capital for his own deals, and he's also a capital broker. So I'm curious about that. So Ryan, welcome to the show. Good to have you.
Thanks for inviting me. I really appreciate it.
So Ryan, first things first, I'm just really curious. When you say you're a capital broker, I think I know what you mean, but I probably don't. So maybe paint the picture more completely for me. What does that actually mean?
Yeah, in layman's terms, I'm raising debt and equity, sometimes structured finance for other owners of commercial real estate. So that could be an owner, it could be a developer, or maybe it's a capital investor. And I'm a generalist, so I work kind of across the country, all asset types, not just multifamily. Similar to a sales broker, but strictly on the capital side, not the transaction side.
Okay. So again, I think I understand what you mean, but a broker connects two parties together. They're kind of the middleman. Who are the two parties typically who you are connected? You told me a little bit about the end user. Tell me a little bit about the person or entity that has the money.
Correct. So I guess another way of saying it, I am the intermediary who is paid to know who has the money and finding it for the end user. Yeah. So typically that's senior debt. I'd say 80% of the time, my assignments are senior debt exclusively. So that would be a lender. That would be banks, life cos, CMBS, debt funds, credit unions. So basically what I do is I run a process where the client tells me what they need. I give them strategic advice on basically problem solving their capital stack and into what they need. And then I go out and market. It could be as small as a marketing list of 30. It could be as big as 150. So I take it to the market. I get the feedback from the lenders. And then I basically negotiate on my client's behalf to get the best terms available for whatever their need is.
Okay. So putting it even in more layman's terms that the average person could probably understand, you're almost like a mortgage broker for commercial real estate investors.
Correct.
Would that be fair to say?
That's 100% correct.
Okay, there we go. Now I completely got my head around it. Thank you for explaining that. Okay, so that's one side of your business. Curious, how long you been doing that for, Ryan?
So I've been in that space for about 7 or 8 years. I kind of I moved into that space, 7 or 8 years ago. I worked at CBRE for a number of years, transitioned into leading a smaller boutique firm out of Tampa, and then went out on my own 4 years ago. So
nice.
It's been great.
Okay, very good. So we got our head around that. And who are your typical clients these days looking for your services?
That's a good question because it is a revolving door and it's super, super fluid. So I guess towards the beginning of my career, it was more, I'd say value add on the acquisition side.
Multifamily or what kind of asset class?
Yeah, I was going to say, so multifamily, office, retail, and a little bit of hospitality. More and more, obviously we're in a very odd part of the cycle right now. There's not a lot of transactions, but I've been working more and more on the acquisition and development land side. So working more for developers, typically multifamily developers. So that is a space that's super challenging right now. So I'm finding a lot of clients are coming to me, please help me. My relationship's dried up. I need to get this done.
And are you able to help them these days? Because capital has tightened up a lot for a lot of people.
it doesn't matter what the assignment is. I will get what the market is bearing. So I'll always have several options. So yeah, I mean, it doesn't really matter. The client doesn't always like what the market is telling them.
Yeah.
Um,
So what I'm hearing between the lines here, Ryan, comparing this to a traditional single family home mortgage broker,
mhm.
is these days it's hard to get the A lenders to lend on things. So you might have to be going to B and C lenders who will still look at these kind of projects, but probably the loan to value is lower and the interest rate is significantly higher. Is that kind of the gist of it?
Yeah, that's more or less correct. And you're still taking it to the A lenders as long as it fits their lending parameters. But yes, they're much more selective right now. So you're typically, even if it does fit the A lender's profile, they're probably lower in leverage, maybe a little bit higher rate, or maybe there's some structure behind the loan that they wouldn't have in normal conditions.
Yeah. Yeah, challenging times for sure. Okay, that makes a ton of sense. So that's your capital brokerage side of things. Thanks for explaining that. Tell me a little bit about your real estate investor side of things because you do your own deals as well. Is that correct?
Correct. So pretty much on a parallel timeline to when I started Magnitude, my capital brokerage firm. I also started as a GP multifamily investor, and the reason I did that is when I was working for CBRE and then Franklin Street, and then kind of went off on my own. A lot of my clients were relying on me for a lot more than just the capital
Yeah.
stack, strategy. It was help me on underwriting, help me on valuation, help me on relationships, help me find deals. And I just looked at my
That's,
colleagues and I'm like, and this is 2020 when things are really, really
yeah,
hot.
boom, boom, boom.
And I'm
Yeah.
like, these guys are just making so much money and I'm doing all the work for them. Like, why am I not doing this? And what I realized is a lot of these guys they're not even real estate guys.
Mhm.
They were connected to capital. So a lot of them were attorneys or doctors, or maybe they were adjacent to family offices. So they had money and they were relying on me for all this. And so that was kind of the impetus for me to go out on my own and start the multifamily business. Um, one that an asset type that I was very familiar with. And so that was the impetus for that. And so that started 4 years ago. Acquired a couple properties back in 2022 with kind of the goal to ramp up pretty quickly with my relationships on the capital side. Start doing bigger deals, get to 1,000 doors as quickly as possible.
Mhm.
And then our last deal we acquired was December 2022. And since then, things have been highly turbulent. Um, Deals started to not pencil. I think things are have turned the corner here, and things are starting to pencil. We've been in, I think, 18 best and finals now in the last 9 months, and still
Wow.
not won a deal. But we've been second like 9 or 10 times, and we've got a few active deals right now that we're bullish on and hopeful that we can acquire. But I think patience is kind of the virtue right now. Um,
Yeah.
but yeah, that's the backstory. So everything we own is in the southeast. I'm based in Atlanta, so primary, secondary markets in the southeast. Anywhere from call it, we're looking at deals as small as 5 million right now, but up to call it 25, 30 million. Trying to stay below the institutional guys right now who have lowered
Mm.
their floors, stepping back into the market.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com. Got it. That makes sense. Well, Ryan, you're in a unique position because you kind of see things from both sides, both perspectives, right? As the GP on deals, as the capital raiser yourself, plus on the brokerage sides, the capital brokerage side, where you're dealing with, a lot of big banks and financial institutions that are financing properties. What have you seen throughout this whole shakeout in the multifamily space from the lender's point of view? Are you starting to see more quote unquote foreclosures or banks taking over multifamily properties that, where the GPs or the sponsors aren't able to make it work? What are you seeing these days?
Yeah, it's been a slow trickle in. I think we're going to see a lot more of it in 2026. A lot of the lenders where there's been loan maturities initially decided to kind of kick the can down the road, maybe do 6, 9, 12-month extensions. Um, but just to give you kind of an idea, I'm working on a live deal for Magnitude, my capital brokerage firm right now, and it's a larger multifamily deal. Call it 40 to $45 million deal. Obviously, we've had a massive reset in values in the multifamily space,
Yeah.
and there's been a loan maturity, and the lender, which is a large national bank, has decided they will do a new loan, but they want a $4.5 million principal pay down.
Mm.
So I was brought in to basically backfill that equity in the form of preferred equity, which obviously, as we know, is a lot more expensive. So yeah, I mean, I think there's the owners are in situations right now where they're upside down. They don't know whether to recap and put new equity in or just sell. And on the other side of the equation, having also I also own multifamily. We went full cycle on our first deal, first quarter this year. So I'm on that side of the fence. I'm also buying, and then I've got a couple other assets where we still got a little bit of term left, but we're trying to figure out what makes sense from a hold perspective. Are we near the bottom of the market? Um, you know, are is this a falling knife situation where we're not at the bottom yet, and should we cut our
Mm.
losses? And a lot of guys are in that situation. So, yeah, I mean, I've seen deals that are being auctioned off. I've seen paper that's being sold by senior lenders already at massive discounts to even the principal balance.
Wow.
I think it's been overstated a bit, but I do think there is moderate to moderate plus kind of risk in the market, and I think we're going to see um, a lot of those hit the market early on next year. The problem is a lot of people are like, hold until there's buying opportunities. There's so much dry powder out that once the wave comes back in, they're just going to be bid to real market prices. So there's going to be no steals out there. There's just going to be deals that are, that pencil to a fair market price.
Well, that's better than it was. Right.
Right. Right.
So given all of that, Ryan, and both of the businesses that you're working on, what are your plans for the next year and a half? Where do you see yourself going?
Well, I think obviously I've moderated kind of the targets. My goal is still to acquire at least one, if not two deals this year on the investment side. Like I said, I'm very close, but still just being patient. So knowing that if we don't get a deal, we can still just circle, hang around the hoop. A lot of times we're back up and deals are falling back to us. Um, Things are picking up, I think, on for both businesses. Um, and both my businesses are obviously very transaction sensitive. So, transaction volumes down 60% from the peak.
Wow.
Most forecasts have that, ticking up throughout the second half of this year and beyond until 2026. So I think my kind of business volume will kind of mirror that. Um, but also I think on the owners who have issues with their current notes, they really tend to reach out to capital brokers when they're in trouble. And so most of my assignments are not easy. They're,
Mhm.
hey, fix this big problem. And so I
Yesterday.
think,
Yeah.
yeah, I
Yeah.
mean, yeah, I've had to close deals in 7 days before. So it's crazy, but you bend over backwards when there's a solution. So, but yeah, so I think we're turning a corner. The sooner the market gets stabilization, I think the sooner the capital markets come back and there's more transactions.
So as we're wrapping up the conversation, Ryan, you've got again a very unique perspective because you're dealing with institutional money. you're dealing with retail money, raising capital from
Hmm.
LPs for your own deals. What are you seeing these days with LPs? A lot of capital raisers I've talked with, they're having a hell of a time raising capital in today's environment, especially from their existing base. A lot of people have a lot of LPs have been burned on deals, or their money's kind of
Hmm.
in limbo, or or they've just backed completely out. What are you seeing on that retail investor side?
It's the hardest period I've ever had to raise capital in. Granted, I've only been doing it for 4 years. Um, a lot of my colleagues say it's kind of reminiscent of the last downturn in the cycle. I think to some degree it's just fear, kind of making LP investors kind of sitting on the sidelines. So they're investing in deals where they have solid relationships, of which sponsors that have performed for them. So I exited my first deal Q1, performed very well, not to perform, but far outpaced the NCREIF index over that time period.
Mhm.
So all those investors want to reinvest, but the new investors, I think they're kind of hesitant, similar to institutional capital. Um, they want to see slightly higher IRRs or cash on cash, which it's not feasible in this market if you have realistic underwriting. So it's kind of a standoff between get it the sponsors getting a deals that also check the boxes for their LP.
Yeah, and a
Um,
lot of guys found that, if the LPs had invested in 18, 19, 20, and, went full circle within a year and a half, 2 years, and, doubled or tripled their money,
mhm.
now showing them what the reality is now isn't very sexy for them. Or they did the good old 1031 exchange, and their money's all
Right,
tied up in deals that aren't doing well.
right.
So yeah, it's challenging times, isn't it?
Yeah, yeah. I mean, you're not going to hit a 3x and a 30% IRR in this market. Maybe you do if
Mhm.
the market goes gangbusters in a few years, but um, yeah, I mean, it's the core deals. The days of getting a 14% return to LP and then saying that's okay, those are over. It needs to be 16 to 17. I think the cash on cash return has to be a bit higher than it has been before, because you're basically de-risking the deal with the going in high cash on cash. So we've shifted our focus a bit to maybe sacrificing some overall IRR for higher going in cash on cash.
Mm.
So that means, stabilized deals that have a good basis.
Yeah. Awesome, Ryan. Well, hey, thanks very much for being on the show.
Mhm.
If people would like to connect with you and find out more about you, where should they go?
Yeah, they can go to my LinkedIn. Believe it. God, I don't even know what my LinkedIn URL is. But
I,
you
I
can
think
go
I think
to
it's just your name, Ryan
it is.
M.
I believe it's Ryan M. Haase is the end of the LinkedIn. So LinkedIn.com, Ryan M. Haase. And if you can't find me there, you can just go to integricapital.com, INTEGRE capital.com.
Awesome, Ryan. Well, hey, thanks for sharing your insights. Really appreciate it. This is fun.
Thanks, Dave. Appreciate your
All
time.
right. All right, everybody. Take care. We'll see you on the next one. Hey there. I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.